African Export-Import Bank, the trade finance bank for Africa.
Hello and welcome to Africa Trade Lines. I am Wole Famurewa. On today's program, we have the pleasure of moderating a discussion on how African governments, multilateral agencies, special financial institutions, commercial banks, and the broader private sector can get behind Africa's SMEs to boost trade. Small and medium-sized enterprises are among the most important drivers of trade and commerce in Sub-Saharan Africa. According to the IFC, they account for up to 90% of all businesses in the sub-region. So how can support for small businesses catalyze trade on the continent? Joining me to discuss this topic are Wahid Olagunju, Acting Managing Director at Nigeria's Bank of Industry, and Philip Myburg, Head of Enterprise Banking, Africa Regions at Standard Bank. He joins us from our Johannesburg studios. Thank you so much, Wahid, for joining us. A very interesting topic and very pertinent as well, given the need for Nigeria and the broader African continent to trade more with itself. So I think a good place to start is just to get your perspective on where the government comes in here, the role of government in driving small businesses, from the farmers to the small manufacturers and to the traders, to do a lot more trade with Africa and, of course, the rest of the world. Your thoughts on the critical steps that you think governments need to take to make this happen a lot more?
Well, thanks for having me. All over the world, the 3 to 4 major drivers of development are the government, the private sector, the international development partners, and then, of course, community-based organizations. But governments are by far the most important because we're looking at the environment in which businesses operate. So governments play an important role in determining the ease of doing business, for instance, and this goes a long way in also determining how competitive businesses can be, because for SMEs to be able to trade within the African continent and beyond, that means they have to be competitive in terms of price, in terms of quality. That business models must be correct, and they must be able to do businesses in line with global best practices, more so in a liberalized global economy. So African governments, I know they have been paying a lot of attention to this to see how the business environment can be made more conducive, for entrepreneurs across the country, small, medium, and large enterprises.
Right. So it obviously starts with the business environment, but in terms of the government really getting behind SMEs for trade, we have great examples in places like China where it's all organized from the farm to the port. There is a strong connection, a strong link that the government has deliberately organized for Chinese entrepreneurs, Chinese farmers to be able to export. And I want to hear more about the deliberate efforts that you think that the government needs to make beyond trying to make the broader environment good for business.
Yes, physically, for example, you started with farming. How do you go about farming? You need to identify a piece of land, you need to clear it, right? Provide some basic infrastructure before you start cultivating. So governments in most other parts of the world do help in these areas by helping the farmers to clear their land, providing them with tractors. They might not have huge capital to buy this equipment on their own, but then there are leasing services, there are hiring arrangements that are made available by government or quasi-government organizations that help them in doing this. This goes a long way in reducing their startup expenses and also reducing their operating costs. And this goes to speak to their level of efficiency. Providing them roads, providing them water, or for instance, irrigation, and then transportation from the farm to the markets. Now, do you want to export primary products, or you want to export goods that have been processed? We have been asked to encourage that in Africa we should export more processed goods, that the goods of value have been added.
Yeah.
So we are talking of industrialization, commodity-based industrialization strategy, adding value to our agricultural produce, so that you don't just export crude products, you add value to them before you export them, so you can earn more during the exports. So adding value, that's industrialization. Government has a lot of role to play to put in place an industrial policy, for instance. And then the factors of production, how accessible are they to the entrepreneurs along the way, building the capacity of the entrepreneurs at all levels. So government can also help in building the capacity, because capacity must come before capital. A lot of them do shout that they don't have money, but then if you have a good business model, if you have a good business case, then money will run after you, be it equity or debt or even grant.
Right. Okay, let me bring in Philip at this point. And Philip, I would like you to begin by just adding to your voice to some of the points that Mr. Olagunju has made on the role of the government. And he mentioned industrialization, and I wonder, do we start by industrializing locally before we can begin to talk about an export strategy for SMEs? Your perspective on that point?
I think your fellow guest raises some very, very good points. I think one of the key points is that government must create an environment that's very pro-business, and that obviously means that infrastructure is absolutely critical. So you've got to start at home. Before you even think about going abroad, you've got to start at home and getting that basic foundational aspects of it right. So whether it is you as government using some of the small businesses as suppliers and just paying those bills on time, you've got to be really practical and just setting them up for success.
For many years, we've seen governments like in China, even the former Soviet Union, the governments are really involved in agriculture. It's very deliberate effort to make sure that they get involved in what the farmers are doing. And I just want to get your thoughts on how we need to tweak agricultural policy on the continent, because I do get the sense that that is really the place to begin. Even though we want to talk about adding value to agricultural commodities, I think at the core of Africa's strength is what we can get from the ground.
Agriculture's got an absolutely key role to play. It's obviously part of one of the various number of industries that governments will look to diversify some of their income streams, moving away from the minerals. And then you've got to look at policies that creates access to land, access to finance. But again, I have to stress that the importance of infrastructure is absolutely critical. And then obviously we as a private sector also have to play our role in giving those farmers access to new markets, access to knowledge, and then also access in terms of a mentoring environment.
All right. But what about policy making to promote trade? Yes, we have to get the infrastructure in place, as he has mentioned, before any business at all can get off the ground. But more specifically towards promoting trade on the African continent, your thoughts about what more you would like to see African governments do?
Well, you hit the nail on the head. Trade policies. You must have the right trade policies, taking into account the areas in which African countries have comparative advantage, because your policies must be designed to support areas of strength, and then you launch yourself from areas of strength onto the continent. You must start by being competitive, like I mentioned earlier, and then being able to produce goods that will be in demand in other African countries. There are frameworks. For example, in West Africa, there's ECOWAS. You need to know, you need to familiarize yourself with how your trade policies interface with those sub-regional agreements, because these are markets, right? And then moving from ECOWAS, you also move to Central Africa, a COMESA region, East Africa, then the entire African continent. And then if you're going to move away from Africa, you're going to Europe, you must know what the arrangements are. And then, for example, Brexit. Britain has pulled out of the EU. There are implications for trade.
Sure.
Then you're looking at the US, there is AGOA, which has just been renewed. So you need to familiarize yourself with those policies and the extent to which the country's national trade policies are consistent or inconsistent with those agreements that have been entered into at the global level. Because at times when you accede to some of these global treaties, then you need to tweak your domestic trade policies back home.
Yeah.
So it's important for entrepreneurs, while building the capacity, to familiarize themselves with trade policies. And I want to believe that most African countries too will come up with trade policies that are favorable to their countries, that take into account their best interest. Because even the big economies of the world, they also take steps to ensure that other trading blocs do not undermine their national economy.
Right.
They go, I don't want to call it protect, but they try to ensure that those arrangements do not threaten the viability of enterprises within their countries.
Philip, I think it would be useful to hear about success in other parts of the world and how we can adapt that to Africa. And I imagine that Asia is a great place to look. And maybe you can speak to where you think governments elsewhere have gotten it right and what we can take away from what those governments have done and apply in Africa.
No, thanks, Wole. I think I obviously spend most of my time just on our continent itself. So my depth knowledge of some of the other environments are somewhat limited. But you know, if you just look across the you know, into some of the other continents, what governments have done is they've set their enterprises up to be able not just to engage within the environment, but also to go cross-border and giving those customers access to markets, making it easy for them to move their goods across borders. I think that's critical, and it's a practical aspect of, you know, that we must never forget about in these types of discussions, because we're quick to talk about policies and what we can do, you know, from a theoretical perspective. But, you know, at the end of the day, when you talk to these small businesses, it's about how easy it is for them to get their goods to customers, how easy it is to find those customers, how easy it is for customers to be able to pay them across border, etc. So the countries that have gotten it right has been able to get that much easier for their small enterprises and their environments.
Right. Let's hear from you in terms of what you see working in Nigeria in terms of non-oil exports, because that is what we'd like to see. From your engagement with entrepreneurs in Nigeria, what can you tell us about where you're seeing very positive momentum?
Well, we have some customers at the Bank of Industry who are doing quite well. Small, medium, and large enterprises. I'll give an example of Telma Farms, somewhere in Ejebode. They grow vegetables and export this to the United Kingdom thrice a week. The brain behind it is Tunde Ogunyemi, a diasporan who used to live in the United Kingdom. So he knows what goes on there. He knows what the requirements are in terms of the health environment. I mean, the health requirements, the food requirements, the NAFDAC equivalent, if you might say, right, in the UK, and what the standards are, and then the British customs. So he took time to study what the requirements are and how to penetrate those markets, and he's doing quite well. Shipping this, everything he produces on that farm, he exports to the UK thrice a week. That's at a small level. Somewhere up in Kano, we have a customer to Salisu Buhari, Rumbu Industries. He produces mats. He has the biggest mat factory in Africa, and he exports those mats from Kano to other parts of the continent, via Maiduguri, for example. And the governor of Borno State was telling me during the week how Maiduguri drives trade in Africa, linking Nigerian entrepreneurs with traders in other parts of the continent. Right. He was telling us that the Kano economy depends on Maiduguri. And it is true. Salisu Buhari told us that a lot of the mats get exported to other parts of Africa through Maiduguri. Amasco also does the same thing, produces lubricants, right, in Kano and exports from Kano. In Sokoto too, we have some customers, right, who produce and they're able to export to landlocked African countries. So a lot of Nigerian entrepreneurs are taking advantage of business opportunities in neighboring African countries to export.
I like the example you used, and I'd like to get Philip's views on this point, because I think he's speaking to a large extent on those informal links between African countries. And I do get the sense that there is a case to be made to support those links, to formalize those links, and to support the entrepreneurs that are exporting items such as mats that he just used the example of mats from Nigeria. From your experience across the continent, what can you say about how governments can get behind the informal markets within Africa?
I think, there are many things that government can do, but I think some of the key aspects is, you know, we got to work together between private sector and government to help these small enterprises become formalized, because when they become formalized, it obviously gives them access to a whole bunch of other things that will make their lives easier in terms of trading across borders. So the moment we get them formalized, it will be much easier to support them from a working capital perspective. It will be much easier to evaluate their risk, support them in mitigating their risks from an insurance perspective, helping them do the payments across border, etc. So I think first and foremost, we've got to help them get formalized by making it easier for them to register their business, making it easier for them to understand tax aspects, and then also putting in place programs together with government to upskill these small entrepreneurs, to make it easier for them to run their business and understand how best to market their product, whether it be local or whether it be cross-border.
Right. And in terms of providing further support, I was speaking to another trade expert, and he made a very interesting point about certifications, that it's really difficult for many African entrepreneurs to be certified to export into markets such as Europe. And he was making the point that some of those certifications are not cheap to acquire, that perhaps that is another area where governments can get behind entrepreneurs and open new markets for those who are already producing locally.
100% right. I mean, you go across a number of countries, you'll find that the policies that have been put in place with the best intentions have actually had, negative impacts on the small entrepreneurs on the ground, and has actually become, in fact, more restrictive. So we've got to think these policies through. We've got to understand the practical aspects of it, and we've got to be careful of putting policies in place that sends the small entrepreneurs into the informal space where they are, taken for a ride by loan sharks and guys trying to do alternative ways that are not quite legitimate.
Right. Mr. Olagunju, if you can speak to reorganizing SMEs into clusters, because I think that is another thing that can really galvanize trade from Africa with the rest of the world, and of course intra-Africa trade as well. From your experience at the Bank of Industry, what can you say about the opportunity for us to support SMEs by helping them organize themselves into clusters?
Yeah, you are quite spot on. In the context of Nigeria and many African countries, there are a lot of challenges confronting SME entrepreneurs, one of them being infrastructure. In the short to medium term, the best strategy for countering that is organizing them into clusters or industrial parks. These are locations where services are provided by government, infrastructure, for instance, roads, electricity, water, sewage disposal, security. When they operate in such locations, it reduces their startup costs, it reduces their operating expenses because they share those amenities.
Sure.
Because as an SME, you need to buy a piece of land under normal circumstances. You need to provide the road, you need to provide your own electricity, you need to provide your own water. But where you are in a localized enclosure and government provides this infrastructure and you share these services, and you just on a monthly basis from your cash flow, right, pay for those services, is much easier than having to be faced with the challenge of the initial capital outlay. Now, when this happens, it also makes credit administration easier because it's easier for entrepreneurs in those clusters to meet the risk acceptance criteria of banks.
Okay.
Typically, if you go to a bank, you need to establish that the property belongs to you, or you have a valid title for that property. To get a governor's consent to mortgage a relevant title, it takes a lot of time and it's more expensive. But when you're in such an enclosure, those are taken for granted because those facilities are provided by government. So it makes credit administration easier. Then capacity building too.
Yeah.
Business service providers, when you are localized, it's easier for them to help. And then the SMEs, they mutually reinforce one another. There's synergy, they share knowledge, they share skills. The output of one can be the input for the other. So there are huge advantages when they operate in such clusters. And then they become more competitive. When they are highly competitive, then it means they can export. That means they can trade.
Right.
Right. And it's just a solution where, for instance, in Nigeria, we are recommending that there should be an industrial park in each, at least, senatorial district. That's like democratizing entrepreneurship. We need more and more of such clusters in Africa.
Right. Philip, do you want to add your voice to this point around clusters?
I think it's a fantastic idea. I think what we've got to look more at is developing these clusters where customers can feed off each other's ecosystems, where you can start developing, as the other guests have said, off-takers and suppliers all close together to each other, and thereby you're able to start generating economies of scale, you start generating efficiencies, and also their ability to influence and get bigger contracts improves. But then also from a mentoring perspective, which I think is absolutely critical in the small business space, in trying to get the skills level up, is mentoring. And the moment you start getting these clusters together and these ecosystems together, it also becomes easier practically then to share knowledge and to put that mentoring system in place to support these small businesses. In your view, what's the best way to use trade groups? I think that's another group that we can use to galvanize entrepreneurs and SMEs on the continent for trade across the continent and, of course, to the rest of the world. How can we better use trade groups as a voice for advocacy for SMEs and, of course, to also communicate with the rest of the continent? Yeah, I think the trade groups gives a lot of these small businesses a voice. It brings them a seat at the table, and I think that's so critical because individually these businesses are small. They're battling day to day, with all the different challenges that a small business owner has, and these trade groups truly gives them a voice. It helps them engage with other markets. It helps them get opportunities. So I'm a big supporter of the trade groups, and whatever government can do from a policy perspective to help put these types of things in place I think would only benefit the small businesses on the continent. Mr. Olagunju, your views on trade groups and what you've seen in Nigeria?
Yeah, we're actually working with those trade groups. They go a long way in helping, but especially the bilateral ones, right, like the Nigeria-US Chamber of Commerce. We're working with them to see how we can facilitate access of Nigerian entrepreneurs to the US markets. They know what obtains in the US, and they know what the requirements are. And Nigerians in diaspora who belong to all these trade groups too have built considerable capacity abroad, and they know what it takes to import into those countries and export from Nigeria. So they are connected with Nigerian entrepreneurs, and it makes it much, much easier for Nigerian entrepreneurs using the framework of those trade groups to be able to penetrate those markets. In Africa too, we have bilateral trade groups in Africa, like the Nigeria-Tanzania Chamber of Commerce, or the United Kingdom, Nigeria-British Chamber of Commerce. So those trade groups are quite important. And even the national ones too, they're like the Manufacturers Association of Nigeria, Nigeria Association of Small and Medium Enterprises, as in NASME. They get a lot of support and assistance from domestic and foreign development partners for their members. And it's easier to administer such grants and such technical assistance programs when you belong to trade groups rather than operating in silos as individuals. So there's quite a lot of value in those trade groups. Right. Philip, I want you to speak before we go on a break here about bringing technology to bear into all of this. At the end of the day, we're in a tech age, and I think it could just change the game for entrepreneurs, how they communicate with others across the continent and across the rest of the world. How is technology changing the way SMEs do business, in your view? Well, the impact is massive, and whether it be access to market, whether it be developing new products, whether it be creating efficiencies, we're seeing digital everywhere we go. Even in the most remote parts of Africa, digital is starting to play a huge role, and it's making the world a much smaller place, and it's giving access to markets for small business owners in places that they would previously never have envisioned. I think talking digital and coming back to an earlier point around what government can do, the digital journey is moving so quickly, and the policies and the rules and regulations that are meant to regulate these digital aspects are just not catching up quick enough. So it's definitely a part that government can assist with, is how do they put policies in place that support the digital age? Because in many instances, it's hampering business because the small business owners want to use digital, they're seeing the benefit of that, but then their hands are somewhat tied behind their backs in certain instances because of whether it be central bank regulations, etc. Mr. Olagunju, I think I would like to hear about
what you're doing with SMEs and how technology is changing the game, because I do know that the Bank of Industry has been engaging quite a few Nigerian entrepreneurs in the creative industry, and we know technology is changing how that is working out. What can you tell us about how technology is providing access for entrepreneurs to export products from Africa?
Yeah, a number of them, particularly youths who are very ICT conscious, have approached the Bank of Industry, and we're supporting a number of them in the creative economy. For example, in the area of distribution of music and video channels, right? I wouldn't want to name names, but many of them who've come to us have come up with fantastic business models, and I dare say that they've been able to repay loans that are meant to be repaid over a 3-year period. One of them turned up and repaid within 6 months using technology. It turned out more successful than he had envisaged. We'll unveil his identity very soon, because he's a superstar. We supported him, and within 6 months, he was able to pay back what it was to repay over a 3-year period. So it's quite amazing, the opportunities in the technology space and how MSMEs in Nigeria are taking advantage of them.
All right, we have to pause for a short break. We'll continue this conversation around SMEs and African trade. We'll take a short break and continue on the practical steps to increase trade between African countries when we return.
African Export-Import Bank, the trade finance bank for Africa.
Welcome back to this special panel discussion on getting behind SMEs to boost trade and exports from Africa. My guests are Wahid Olagunju, Acting Managing Director at the Nigerian Bank of Industry, and Myburg, Head Enterprise Banking Africa Regions at Standard Bank. Thank you so much for staying with us on this point. I want us to now move on to the money, which is, of course, what the likes of the Bank of Industries and Standard Bank will provide. But where do we start? Because we have to de-risk many of these transactions before we can lend to them. But on the flip side, we need many of these entrepreneurs would typically not qualify for many loans. So what's the smart thinking around how we can de-risk SMEs transactions for exports?
The first thing is you need to build their capacity. A good number of them have brilliant ideas, but they do not know how to translate those ideas into business models, then have successful business plans built on those business models, and then go ahead to implementing such business plans. And factors of production are required when you are venturing into any business. Finance is one of them. Most of them believe that finance is the most important. No, it's not. Getting the right business is the most important, because money will always run after good transactions, and money will run away from potentially bad businesses. So the important thing is getting your business model. What do you want to produce? And who would be ready to exchange his or her own hard-earned savings for the goods that you are producing? That is the value proposition. If it's across the border, you need to find out where do you want to export this to. It definitely means that you are thinking of exporting from your own country products over which you have competitive advantage to the neighboring country where they do not have such competitive advantage, or where they cannot be efficiently converted into competitive advantage. They might have those raw materials there because they are landlocked. Importing the plant and machinery, the capital equipment, could be expensive relative to an entrepreneur who is located in Nigeria. A Nigerian entrepreneur would find it easier to employ the plant and machinery, add value to the raw materials in Nigeria, and export to the neighboring country. Because an entrepreneur in the neighboring country would have to go through the hassle of importing the plant and machinery through a third country. And that weakens the competitiveness of such entrepreneurs. So entrepreneurs in Nigeria have such comparative advantage, and then you want to work with them. You want to hold their hands to ensure that you properly appraise their projects. Because a number of them just want to go and start doing businesses.
Yeah.
But you need to appraise projects to ensure that they do not embark on a bad venture, and where the venture is potentially good, if it's not well appraised, it could go bad.
But I do get the sense that this hand-holding that you're speaking of, it's something that will perhaps put a lot of pressure on the resources of a bank like the BOI. And perhaps another approach to this is for the economy to be organized in a way that those entrepreneurs are trained before they come to the Bank of Industry. And Philip, I want to get your thoughts on this, because we've seen in Nigeria, for instance, quite a few banks creating special training institutes for SMEs, trying to really get them prepared to do business. And is this a source of frustration when you go across the continent? Do you get the sense that that is perhaps the biggest challenge in trying to get money or capital in general to SMEs who would like to export?
Yeah, no, absolutely. I think a lot of the banks are doing some great work, including ourselves in a multiple number of countries across the continent, and in putting incubators in place, putting structures, formal structures in place that assist small businesses in terms of mentoring, helping them understand what they need to put in place from a business case perspective, how to find suppliers, how to have access to markets, how to put a business plan together to get access to capital, etc. So from that perspective, I think a lot of great work is being done. So much more can be done, of course, but I'm proud to say that and to see that many of the banks are taking that challenge on board, because as we know, working capital and capital is very much a challenge for many small businesses. From a bank's perspective, it's a very difficult environment to invest your money in, because, as you know, 80% of startups fail. So if you have to invest your money into a venture where the possibilities of loss is that great, you got to challenge yourself in better understanding that risk. So we're doing a lot of innovative work. A lot of the banks are, and we're also being challenged a lot by the fintechs out there, both challenging us and looking to us to partner with them to come up with innovative ways in which we can support the small businesses. Because I think we all acknowledge it's not just something we have to do, but it's, if Africa is our home and we want to drive our growth, it's very much something that we got to get right.
Right. So the Bank of Industry, of course, is a development finance institution, a local one. And I want to hear more about, the role that you would play in financing, because, for instance, typically most entrepreneurs will go to the commercial bank to try and finance their projects. How are the likes of the Bank of Industry working with the commercial banks to ensure that capital gets to the SMEs?
That was why a couple of years back we signed MOUs with 10 SME-friendly commercial banks to see how we can jointly support MSMEs. We grant long-term financing at single digit over a period of 3 to 4, 5, 6 years, and they provide the working capital. Although a little bit more expensive than what we render, by the time you blend the two, the average comes down, right? And it makes it much, much easier for MSMEs to access both long-term and working capital. We, as a DFI, we cannot afford the branch network that the commercial banks operate. And we do not have, because we're not a deposit money bank as well, we don't have control over their cash flow. We cannot watch how they perform. But the commercial banks on a daily basis, they see their inflows and their outflow. Right. And when we jointly finance projects, they keep an eye on their cash flow on our behalf. And during the repayments too, we have sweeping arrangements between the commercial bank and the Bank of Industry, so that as and when the repayment falls due, the commercial banks automatically transfers money from the account of the SME to that of the Bank of Industry. And at times too, we ensure that even where the SMEs are not able to meet our risk acceptance criteria by way of security, we bring in their commercial banks to cover. For instance, we financed a movie outlet, and the commercial bank manned the box office. They sell the tickets, and the proceeds are banked. And on a monthly basis, they were transferring the repayments to the Bank of Industry. And that company was able to repay well ahead of schedule. There was no physical security arrangements in place, but the security there was that the commercial bank, our partner, had control over the cash flow, and because they manned the box offices.
So are you saying that the Bank of Industry is now more willing to provide capital without collateral? Because that's what many banks will tell you when you walk into their branches, that we need security for this loan. What's the assurance that we'll be able to recover our money?
For instance, we can lend up to 10 million to youths, right, without physical collateral. What we say is go bring 2 Nigerians who can guarantee you, or where it's below 5 million, perhaps just 1 Nigerian who can guarantee you.
But but that would still be very difficult for many SMEs to find people who would be willing to take that risk on. And maybe I should get here more from Philip on this point, because you're obviously in a commercial bank, African-wide bank here. What's been your experience in trying to address the issues around collateralizing, lending, perhaps working with DFIs on the ground, or those that have a focus on the entire continent?
When it comes to access to capital, obviously the collateral piece is often a stumbling block for many of these small businesses. They just do not have the collateral that the commercial banks are asking for. And I mean, the way that these risks, these capital products are getting looked at, and the way that we evaluate the risk is, you know, in many instances the banks have been caught doing it in ways that are more attributed to bigger commercial businesses. So we've got to change the way we think about what type of collateral we ask for, how we de-risk the transaction, and how we ultimately help the small businesses with working capital. But you know, in the previous example that was mentioned, it definitely touched on something that we must definitely improve on, and that is looking at more structures where we can have tripartite and partnerships in place, formal partnerships in place to support the small businesses and de-risk these transactions. I mean, typically, if you can put some sort of a risk-sharing scheme in place, that often helps the banks think about the risk very differently. I think the other piece that we also got to think around is not just about risk sharing from a collateral perspective, but it's also around the type of product that business is producing and who the off-taker is of that product. Because the moment you as a bank understand who that off-taker is and how good that contract is, immediately that also de-risks the transaction for us. So it's not just a partnership between the commercial banks and government institutions, but I also think the likes, you know, multinationals and the like also have a role to play, because if they can also come to the party as off-takers of certain contracts immediately, that will de-risk the transaction for us commercial banks too.
I want to bring a point back to you. Mm-hmm. Do you think there is a case for us to create special institutions that could perhaps fund special types of businesses? Because I do get the sense that there is the opportunity for Africa to really develop in certain areas. A good example is what you mentioned about the support you are providing to the creative industry in Nigeria, which many people have suggested has significant potential to grow across the continent. And perhaps there is a case for a special institution or special financial arrangement to, if you like, gamble on that industry. Your thoughts about that?
Well, that will still be a supply-side solution. In my own opinion, the solution will not lie in setting up many other institutions to support certain areas. At the Bank of Industry, we create special desks to take care of special products. And we know that we cannot be experts in every field. So we bring in experts to advise us, to guide us. For instance, for the creative industry, we have an advisory panel. For our intervention in the solar space, we also have an advisory panel. We bring in experts from industry, from the academia, right, to guide us, to help us navigate those terrains. Because if you start creating new structures, it's quite expensive doing so. But where you leverage on an existing institution, it goes a long way in helping, right? Like in Brazil, for instance, the VNDS of Brazil. That's one DFI they have. And they look after all sectors of the national economy.
Right.
And then even the skills too. will not be available in Africa, setting up many other institutions to service different sectors.
Right. The reason I mentioned this, and Philip, maybe you want to react to this, is that I've spoken to a couple of entrepreneurs, and they often say things like the banks do not understand the transactions, they don't appreciate the risk, and so as a result, they are frustrated, and they get a sense that maybe somebody has to be there to just take a gamble on what they can do, because as I've mentioned, quite a few segments of the economy have significant potential to grow.
I think that's obviously a comment that you often hear, but ultimately, we'll look at every transaction on its own merit. We'll look at the business case, we'll look at the opportunity, we'll look at the sector, we'll look at the individual involved. But it'll be so much easier, if all of this happens within an environment that's already de-risked the environment. So whether it comes via the government or via incubation or via mentorship or via even the clusters that we spoke about earlier, the moment it comes out of that context, it immediately puts the small business on the front foot with that application. But if it's outside of that, it doesn't mean we necessarily don't look at it. Every case, as I say, we judge on its own merit. But it is difficult. I understand, as we said earlier, there is no collateral. Often it's a startup business. It's got a great idea. So it is difficult to convince someone of just an idea before having proven yourself with some sort of track record.
Mr. Olagunju, I'm still staying on this point, and just to give you an example, so if we have a farmer who is perhaps living in southwest Nigeria, he has proven that he can be an effective farmer, but he needs to scale up. He needs to get better seedling. There are things that he needs that he can't provide any capital or any collateral for, but he has also shown a track record of performance. How do we get behind people like that?
Well, you mentioned farming. There's the NISL, okay,
Right.
which has been set up to help de-risk entrepreneurs in the agricultural space. They guarantee up to between 50 to 75%.
Right. So we're not talking about credit guarantee schemes.
Of course, yes. So they do that. Because of the MOU between the Bank of Industry and NISL, we've increased our intervention in the agricultural space. Right. And they are quite knowledgeable in this area. So we jointly appraise and evaluate projects. You mentioned a point. Banks do need to build internal capacity. And that was what I was saying, that at the Bank of Industry, we realized that we can't be masters of everything. So bringing in advisory panels for those specific areas, right, where we believe we're not as knowledgeable, is part of building internal capacity. And then we also send our staff to other institutions that have done quite well in those areas, like the IDC of South Africa, which is one of the oldest development finance institutions in the world. In South Africa, they are doing quite well in mining. We sent our staff to IDC in South Africa to work in the relevant department of IDC that render financial support to entrepreneurs in the mining space. We do the same thing with BNDES of Brazil, KfW of Germany. We have staff exchanges where we build the internal capacity of our staff.
Right. Great, fair point. And Philip, back to the point around capacity building, which I think perhaps is the best way to crack this financing problem for SMEs. And can you just share more thoughts on how, we mentioned the government earlier, what they can do to help provide, to help build capacity for SMEs and perhaps the private sector? How can they get behind some of these entrepreneurs who are perhaps providing the raw materials that they need for development? Your thoughts on how everyone, the government and the private sector, can get behind entrepreneurs to build capacity?
Yeah, no, you're absolutely right. I mean, we're always quick to point, fingers at government and, as if they're the only stumbling block. But I think we as a private sector also have a key role to play, whether it be ourselves as commercial banks or whether it be some of the bigger corporates in these respective environments. We can, between the banks and the multinationals, I think we can add a lot more. You mentioned the example of an advisory panel. There's knowledge, there's significant knowledge within the banking environment and within the big corporate environment that can be shared, and that, to be honest with you, want to be shared. You speak to the leadership of commercial banks, you speak to the leadership of the big multinational corporates, they all want to see success in the small business environment, and they're extremely keen to get involved in mentorship and in advisory. And at the end of the day, these big corporates are also a key access of a marketplace for the small business as an off-taker of products. So, I mean, there's a number of countries where we've done exactly that. As an example, you look at South Africa, you look at Mozambique, we've done some exciting things in Kenya. So, it is being done, but I think a lot of work to be done in terms of scaling that model. We've learned a lot of lessons in that space, but I think, we're definitely heading in the right direction, and I think private sector is starting to put up its hand to play its role in uplifting their respective communities in which they operate in, and trying their best to see small businesses succeed.
From what you can see across the continent, Philip, can you help us dimension the opportunity for more trading within the continent relating to SMEs? And maybe that could help really ginger the authorities to begin to think about how they can begin to tackle this issue and at the same time tackle the huge poverty problem we have on the continent.
I spend every week in a different country talking to small businesses, and I have to say, I think often we underestimate the size of the trading that's happening in some of these markets. Whether you go to Makula market in Accra, or Kikomba market in Nairobi, or Kariakou market in Dar es Salaam, it's absolutely incredible when you spend time in those markets and you're engaging with the small businesses to see how much of that business is actually going across the border. When you're in the marketplace in Kampala, how many South Sudan folks are you seeing in the market coming across, purchasing things and taking it back? So a lot of it is informal, and therefore I think we often underestimate the sheer volume of trade that happens between these respective countries.
Right. Mr. Olagunju, I want to hear more about how we can really scale up in Nigeria. We're speaking to many markets, and we know in eastern Nigeria, for instance, as the Aba market, where we're seeing incredible entrepreneurship from Nigerians in terms of creating and manufacturing shoes and so forth. How can we get behind those people to not just supply products for the country, but move them closer to the export market?
When we come up with good procurement policies in Nigeria and we buy their goods, they get strengthened. And
so we really have to start by increasing the local demand.
Exactly. So that prepares them for export markets. And you mentioned the southeastern part of the country. They supply goods to a lot of West Africa, to East Africa, Central Africa, using the Atlantic route, to Cameroon, to Central African Republic, to Congo, Brazzaville. I've been to all these countries and I see made in Nigeria products all over the place, albeit some of them through informal channels, right? But then there are the big ones too, like Proforce. They produce armored vehicles somewhere in Ogun State and able to export to some other African countries, and they're doing quite well. So I agree with you, we need to do more to support them, but let's have good procurement policies. Let's be able to help them build their capacity. Let's support them with infrastructure to enhance their competitiveness. That would go a long way in helping them a lot.
Right. Philip, maybe you can speak to some examples that you have seen, some markets out there, some manufacturing clusters that you have seen on the continent that we really need to get behind, because I really hope that the message can come through from this program.
Every country is very unique. I think that's one of the things I've learned in my career in this space, is that every country is very unique. Every market is very unique. So you must be very careful of using examples from another space and trying to bring it back. But I think the core to this is that in all of these spaces that we're talking about, there's a lot of products and services that are being produced that can add great value to off-takers and other spaces, and it's just not, we're just not creating an environment where that is happening, and it's few and far between where we're absolutely getting it right, to be honest with you. I think we're getting better and better at creating environments where trade is happening within the country, within the borders, but we've got a lot of work to do when we talk about going cross-border. You talk about, whether it be coffee or flowers or anything like that. These things are leaving their respective environments in a raw form with no value being added. So we've got to create environments where, first and foremost, we encourage industries that adds value to these raw materials, and then we can only start looking at finding markets outside the country for these products, and then making it easy, of course, to do that trade.
All right. Mr. Olagunju, I want you to speak again to the role of government in creating markets for some of these exports. It's obvious that we need to build the infrastructure so they can be competitive, but I think some are already taking some baby steps. You mentioned the entrepreneur that is exporting vegetables to the UK, and I think that there is a case to be made for the authorities here going into those markets, gingering either entrepreneurs or potential buyers and opening their eyes to what is available in countries like Nigeria and, of course, elsewhere. So maybe the best route is trade fairs. Your thoughts on that?
Yeah, that's where the bilateral chambers of commerce come into play, as well as government agencies like the Ministry of Industry, Trade and Investment, like in the United Kingdom, the equivalent is the UKTI. They collaborate quite a lot to see how they can reinforce entrepreneurs in this country. Right? The UKTI are helping entrepreneurs in the United Kingdom. The MITI in Nigeria is helping entrepreneurs in Nigeria. And then working, of course, to the bilateral chambers of commerce. So you're looking at PPP arrangements, a public and private sector arrangement, because such collaborations that can help. It's not government's responsibility, really. But then government can facilitate. Government can help create enabling environment.
So is it more of the trade groups and the representatives from the trade clusters that will get that going?
Yes, working with government officials.
Right.
They must work hand in hand, certainly, because they know what the policies are and how best the entrepreneurs can benefit from those policies. And where there are challenges on either side, government officials can also get behind the entrepreneurs to say, look, hey, what's going on here? Our entrepreneurs are doing X, Y, Z. We need to get this. Because typically, too, government also protect the entrepreneurs. They try to protect their own national interests.
Sure.
But the government officials need to talk.
Right.
There need to be handshakes between government officials of many of the countries that would deal with that. That's why for trade to be promoted, governments shake hands a lot. And it's not surprising that immediately President Trump was sworn in, the British Prime Minister, Theresa May, visited him because she realized that because of the Brexit, there are implications for trade for UK, and the US is a big market. So she went there to open doors to explore opportunities for UK businesses, in the US.
Right.
So governments normally take the lead, and then private sector normally follow.
Right. Philip, I want you to speak to this point I think he has raised, which I think is very pertinent. The governments, the leadership that they are showing in driving trade, especially within the continent, I do get the sense that that message needs to be passed across very strongly. Do you get the sense that we're doing enough? Are African leaders leading the charge to get trade moving across the continent?
I think we can do so much more from a government perspective, to be absolutely honest with you. Some very good examples were mentioned now about what government can do. But, instead of, as I mentioned earlier, pointing fingers at government where we know there's development areas on their side, I think from a private sector perspective, we also got to look at ourselves to see how we can encourage trade and how we can make it easier for small businesses to find markets across the borders. And I think you look at commercial banks, you look at we have thousands of customers in multiple geographies. There's absolutely no reason why we cannot connect them to each other and provide access to markets, access across border. If you're looking for a supplier or an off-taker of your service or your product, you should look towards your bank to be able to generate that lead, to generate that opportunity for you in a different geography.
Right. I do get the sense that there isn't enough of a deliberate effort by African leaders to make trade happen.
A good example is Nigeria and Kenya. A lot has happened the last 3 years to promote trade between both countries. Kenya, they just discovered oil, and they're very weak in that area. I'm aware that a number of Nigerian entrepreneurs are being encouraged to go to Kenya to operate in their oil industry, where we've acquired a lot of experience over the years. They are very strong in agriculture. I'm also aware that a number of Nigerians are interfacing with Kenyan entrepreneurs. There is a greenhouse somewhere in Lagos that I visited recently that is being managed by Kenya, who was brought in from Nairobi, who is the manager of that greenhouse. That's an area where they have expertise,
Sure.
where we don't have. So the Nigerian entrepreneur went in search of a Kenyan to manage that facility for her. And we also have Nigerians who have done quite well in the oil and gas sector, who are also going to Nairobi. And then in the financial service sector too, we have Nigerian finance experts who are also doing well in other African countries.
Very, very, very valid point, and hopefully we'll see more of this. Thank you so much for joining us. We have run out of time. On that note, we've come to the end of a panel discussion on intra-Africa trade. My guests have been Wahid Olagunju, Acting Managing Director at the Nigerian Bank of Industry, and Philip Myburg, Head Enterprise Banking, Africa Regions at Standard Bank, who joined us from Johannesburg. And I'm Wole Famurewa saying thank you for watching.
African Export-Import Bank, the trade finance bank for Africa.